Good morning, everyone, and welcome to Coffee and Conversation with Kristen. Hope you guys are having a great day. Today, I wanted to talk to you about the market and give you a market update and what I'm seeing out there in the industry. And one of the things I love about working at Guaranteed Rate is we're nationwide. So we have a lot of colleagues, even across the nation. We can bounce ideas, thoughts, research, what's going on in the market across the way, and really give you guys some valuable information. And one of the things I wanted to discuss with you today is things and questions I'm getting a lot from consumers and clients that I thought was really imperative to bring out to you, especially in today's market. So just so you are all aware, I am licensed in most of the Midwest right now, growing, more information on that to come. And I have been in the business for 19 going on 20 years. So I've seen all the markets, not all of them, but most of them, especially in the last 20 years. So I wanted to bring the discussion today about what I'm hearing again from people and the main questions I'm getting. The biggest question I'm getting right now is, Kristen, when is this bubble going to burst? When are values going to fall? Are they going to all foreclose? Most people foreclose. What's going on? This is just like 2010 when the housing crisis happened and the banking crisis happened. It's coming again. So what I want to bring to you today are some of the myths of why I don't see that happening. And when I talk to my colleagues across the nation, they agree, and the differences of that time frame, or we'll just call it the 2010 era, and today, okay? So one of the things that's making people think that we're in the same boat is the rising home prices, the rising values, and they're rising relatively quickly and have over the last couple of years. The difference between the 2010 era and today is that back then, appraisers weren't necessarily regulated the way they are now, okay? So you had a lot of inflated prices. You had a lot of inflated values based on those prices, okay? Today, the regulations really have them protecting our industry. Now, believe me, as a lender, I don't always love it when an appraisal doesn't come in at value of the purchase price. However, it's important to know that it's not because it's protecting us. It's protecting our industry where we didn't have that 10 years ago. So that's really important there, okay? The other thing to be, cognizant of is the fact that back then, or in that era, there were a lot of people financing at least at 100%, if not over 100% loan to value. Nowadays, if there isn't a gap in that appraisal between the purchase price and the value, and people are still paying the overage of that, let's just say $20,000 or $30,000 from that gap, that's coming in with cash. They are not financing to 100% or even over 100% in most cases. So what I'm saying by that is that's called appreciation, because people are actually paying the difference with their own money. Americans are saving much more than they ever have before. So they do actually have the money to come in with, whether it's a gift from a family member, or let's say it's a, part of their investment accounts, their retirement account, just their checking and savings. They really are coming in with that true cash. So that's appreciation, okay? The other reason for the price points being up now, where they weren't before, is because rates are low, but we also have a lot less inventory available, okay? So before, values were going up based off of inflated values. Now they're going up based on actual people paying appreciation, and then the fact that there's a shortage of homes for sale, okay? I think I had read something that had said we only have about 60 to 90 days of inventory, where typically we would have 6+ months of inventory. So as you can see, there is a shortage there. Now, with that being said, the other caveat to this is back in the housing and banking crisis days, we were also delivering loans that were stated income and stated asset, meaning that the client would just say, hey, Kristen, I make this money and I have this much in my bank account, give me a loan, and we would lend on that. Now, with that being said, I want to make it very clear that not all of us were doing bad loans, okay? I'll give you an example. I had a client, more than a client, a lot of clients, it's just one particular situation where I legitimately, and this was back in the 2010 era, had a client with pay stubs in the file, bank statements in the file. They were fully legit. They were good borrowers. I sent it to a well-known bank that I don't work with anymore, and The underwriters there sent the file back to me and said, Kristen, shred all this. We don't want any of the documentation. So even as a lender and a loan officer, if I wanted to give a file with those documents, they were sending it back saying no. So it wasn't that all of us lenders out here, all of us loan officers were writing bad business. A lot of us were still writing really good business. They didn't want it. So that just kind of gives you a difference right now, because right now as a loan officer, I can't get enough pay stubs from clients. I can't get enough bank statements. Can't get enough verifications of employment. We do one in the beginning and at the end to ensure that everybody has a job and the income is there. The debt to income ratios have restrictions. Reserves are big, where we have to make sure that you have money in the bank or an investment of some sort that you can continue to make those payments, where back then we didn't need any of that. So as lenders, we are now regulated as well to really ensure we're not only writing clean deals, we're writing deals for people who can legitimately afford these homes, okay? So those are some really big differences. As a seller, we have a shortage because one, rates are low, which means a lot of people refinance to a lower rate in the last year or so. Now, as a buyer, you're always gonna have, and as a seller, you're always gonna have people who are going to move up homes, move down homes, relocate, things like that, right? So the purchase market will always be here. What's super important right now is that you have a team working for you, working on behalf of you, meaning your real estate agent has your back. They're protecting you. They're writing for you and negotiating for you to the best of their ability. As a lender, you want somebody who you can communicate with, who is being forthright with you, who is giving you clean and accurate fees from the beginning to the end. But also somebody who can close that deal on time and really work to get you all the information you need, right? So it's really important to have that team working for you to make sure that you're putting your best foot forward on every transaction. Now, I have some buyers who are getting loans or getting homes accepted in their first offer they write, and some that are 10 to 12. Don't give up the fight. Stay patient. There is a home out there for you, and there will be. Work with a lender who wants to make sure that you're getting your best foot forward. We offer our financial commitment up front, which can be a game changer for that. It's called Red Arrow Express. We fully underwrite our loans at pre-approval status. This is no charge to you. So as a buyer, my suggestion is get with somebody and a lender like myself who's really gonna make sure you're represented the best you can be represented, because this market is tough. Now listen, none of us have a crystal ball. The last question I'm asked all the time is, how long is this gonna last? Should I just wait and hold off for values to fall, for prices to fall, and things like that? Again, we don't have a crystal ball, but what we're seeing and what I'm researching and what I'm showing is that it's going to last a little while here, potentially even a few years, because there's just not going to be a plethora of sellers coming out of nowhere. Homes are not going to be foreclosed on in this big, huge bundle like they were in that era, because people are securely in their homes. There's jobs available. They're not losing their jobs. They're working. There's really no reason for a huge foreclosure front to come in. So it's really important that, again, you're working with a team who's really gonna put your best foot forward as both a buyer and a seller to make these deals come together for you and on time, so that you can feel confident that as a seller, you're going to sell and be able to move into a home. And as a buyer, you have an opportunity to get into these homes as well. If you have any questions and you want to talk more about it, I am happy to have that conversation. Drop me a comment below, give me a call. My contact information is there. Again, my name is Kristen with Guaranteed Rate. I'd love to help you out. And if you know anyone that you think can use this information, please like, share, and always subscribe for the best mortgage information and education available in our area. Thank you so much for watching and listening today. I hope you're having a great day. We will talk to you soon. Bye-bye.